to welcome you once again to StartUp Grind Johannesburg. Who has been here before? I'm seeing a lot of familiar faces, which is a very good thing. And for those of you who are here for the first time, I think let me just give you a bit of an overview of what Startup Grind does and how you guys can get involved. As a matter of fact, there's actually some opportunities for anyone who wants to open the chapters. It can be in any city that we don't exist in. All you do is go to our website, startupgrind.com/start, and you can also run a Startup Grind chapter of literally any city that you probably come from or that you know of the entrepreneurial ecosystem from that city. So Startup Grind is the largest independent startup community, actively educating, inspiring, and connecting more than 1.5 million entrepreneurs in over 500 chapters. We nurture the startup ecosystem in 200 countries through events, media, and partnerships with organizations like Google for Startups. The cornerstone of our global community are monthly events featuring successful local founders, innovators, educators, and investors who share lessons learned on the road to building great businesses. Founded in Silicon Valley, Startup Grind has helped millions of entrepreneurs build their businesses, connect with strategic partners, and secure funding. We believe in making friends and not contacts. We believe in giving and not taking. And we believe in helping others before helping ourselves. And if you've noticed on your cards, there is a hashtag there that you can follow, hashtag StartupGrindJHB. Follow the conversation on Twitter, on Instagram. You can post pictures. You can let the people know of what you guys think of Startup Grind and how they can get involved. If there's anything that has been said tonight, you can tweet that, and we can even take it a step further. And everything that's going to be happening tonight is going to be filmed, and it's going to go onto our YouTube channel. So literally all you do is search Startup Grind Johannesburg, and that's where you get all the videos that we have created, even the past videos that we've created of the previous Startup Grind. And I'd also like to thank our sponsors. Is PayFirst here? So yeah, so we've got two sponsors who help us create these events. What you see here is basically we wouldn't be what we are if it wasn't because of them. One is PayFirst. They're a payment getaway system. If you need a getaway platform, if you need anything from them, you can literally send me an email. If you want to work with them, if you want to know more about them, send me an email, and then I can link you up with the right person to speak to. And also this beautiful venue that you see here is sponsored by Impelo. This is a co-working space. I know they give away a 5-day free pass if you want to try it out. If it's something for you, you can either come and work from here for 5 days for free, and then after that, then you can decide if it's for you. You can rent a desk, etc. And then we've got Hetzner. It's a hosting company. They also help us with a sponsorship. And I'd also like to give a shout out to Sergius. The juice that you're drinking there is probably from them. It's obviously from them. And Rebirth Coffee and Rebirth Wine. And I would love to also give a shout out to my amazing team. We've got Neil, the videographer, Isao, the photographer, Misana with sound, and my amazing team that helps you there. They are literally the reason why Startup Grind is what it is. Startup Grind Johannesburg is what it is. They literally keep us together. So there's actually people who have sent me emails that they're keen on pitching tonight. I just want to know who's here. Is Benny here? Nope. Okay, Francois? You here? Okay, you guys are actually going to pitch at the end of the event. And do we have Lisa? Yep. All right. Do we have CJ? Yeah. Awesome. That's great. So what we're going to do today is going to be a little bit different from the normal fireside chat that we've been having. I'd like to keep it as interactive as possible. The reason why you guys are here is because you actually are the ones that want to ask our guest questions. I don't want to be driving the entire interview. I want you guys to be as engaging as possible. And I want you guys to ask as many questions as you'd like to our panelists so that you get the most out of it. So the most part of it is to get your questions answered so that you don't get to then try and reach our guest speakers after the event. You'd find that most of them are really busy. They don't have time for you and all of that. So that's the reason why we host events like so that you guys can now have that conversation, that one-on-one conversation with our guest speakers. And just without wasting any more of your time, I'd actually like to welcome our first speaker, Tabs Kadir from Uprise Africa. Please give her a hand. Our second speaker is Pierre Thierselin from Pitch Ventures. And our third speaker is Saki Zamkaga. Did I spell it right? It's very hard for pretty people to actually say any other language. And he's from ZAX. Please give him a hand. All right, welcome to StartUp Grind Johannesburg. I'd actually like each one of you to just give me an overview of what your individual companies do, starting with Uprise Africa.
Good evening, everyone. I'm not sure how many of you know about Uprise Africa, but Uprise Africa is the first equity crowdfunding platform of South Africa. We launched 2 years ago. We call ourselves more than a technology platform, we call ourselves a regulatory platform. So crowdfunding has been around in other countries, UK, US, for a very long time, for about now 7 years, which has taken over the entire, quite a substantial venture capital market. In Africa, obviously you cannot just pick up something, an idea of US and UK and just replicate here. So it's a very hybrid model where you also have opportunity to list your businesses to get crowdfunding, but we also match it through our own venture capital funds.
Okay. Thanks.
Hi, I'm Pierre Thierselin. I'm co-founder and managing partner of Pitch Ventures. Pitch Ventures is a fintech consultancy firm based out of Europe, Malta in particular. I'm spending more and more time here in South Africa for personal reasons, my daughter being half South African. So I'm keen to know more about the local startup world, and we're involved in M&A activities as well as fundraising and some seed funding. So hence me reaching out to Beth, who nicely invited me to be with you today.
Thank you. Saki Zamkaga, I'm director and partner at ZAX, one of the new stock exchanges. So we list companies of any size, but we'll get into that, what the minimum market cap is, and if you can't meet that minimum market cap, what we do. I'm also director in a Section 12J venture capital firm. We finance asset rentals, movable assets. So basically involved in capital raising.
Awesome. I want to start with you, Pierre. You actually mentioned to me last week when we had a chat together, and you said you are particularly interested in investing in South African startups. So I just want to know what appeals to you at the moment. What kind of sectors basically appeals to you at the moment?
Primarily financial technology, that's our sector.
Yeah.
But we go beyond, we're looking at opportunities in the CBD sector, in anything software related, which was a former life of mine. So primarily financial technology, but open to, really open to everything and anything that we understand. Because we have to understand it, because we're seed investing, and we're talking about investing smart money, so we get involved. To get involved, we need to understand the business and to be able to actually contribute. So anything that makes sense to us, really.
And then what, so you're saying it's seed level?
Yes, I mean, we're involved in raising funds for clients of ours, bigger amounts.
Yeah.
And that's mainly in the financial sector. For us, seed investment is anything between 25K and 100K euros, so you're looking at 250,000 to 1.5 million rand. Really the seed, where it grows from.
Yeah.
That's where we're at. So to know exactly what we're interested in, well, we need to have a look at it. But primarily financially.
Okay.
Does that answer your question?
It does. Yeah, it does. And Tabs, there's actually forms. I don't know if you all received forms from Uprise Africa, So I just want you to explain a little bit further about the crowdfunding platform and how it works, and what kind of people should be applying for the crowdfunding that applies.
For us, your story needs to sell. Simple, as simple as it is. I don't know, Beth knows about my background. I don't know how many of you knows about my background. I don't come from a fintech background. I don't come from a technology background. I come from a very hardcore manufacturing background. I made a lot of money from textiles and then lost a lot of money in airline. Started an airline in South Africa called Skywise and lost what all made in 18 years. So from that point of time when I was I was just short of 2 million rand when they closed my airline. And it was ridiculous. 2 years of so much of hard work, I'm sure many. I was in public domain, so many of you know that. So this platform was not built up. Actually, it was built up for myself. I wanted to crowdfund airline because I thought if the crowd will be along with me, there is no way that I'm going to fail because I will have my investors who will be flying with me every time. So that was the main purpose of starting this platform. So I didn't have this VC mandate or something behind that when I started this. Yeah. But I was obviously fortunate enough. I was part of BRICS delegation when I was traveling, and I got a very good offer from the Chinese consortium. So they had, we went into an MOU where they have an exclusive mandate till 2022. So now I had this platform. I had hunted the best team to start this platform, went through all the regulations, and decided that let me start this platform now for all the entrepreneurs. So it is important how you connect with the crowd. You can have not necessarily people say crowdfunding is more about consumer product. I don't really agree with them. It is depending, it can be a B2B or B2C business, but how good are you telling at your story? What is your network? End of the day, you are enabling your networks, right? If one business is there and all of us come together and support that business, we are also hedging our risks. So if we are spending 2,000 or 3,000 rand on entrepreneur, and if he fails, people ask me, most of the times they ask me, how risky is your investment? When we invest in you, what is the risk? The same question if you ask my team, they will tell you that how we take you through the entire due diligence, financial due diligence, and we actually do intensive work before we list you. But when you ask me, I will tell you, now you are spending 2,000 rand on an entrepreneur and you want to ask how much risky is it? And you spend 2,000 on a beer. So please, come up with this behavior changes if you really want to change the ecosystem of South Africa. All you need to change is behaviors here. So definitely I think any story, good story is good story for us.
All right. And then what's going to happen when they fill up this form?
So when they fill up this form, there is a small review committee which sits and which sees obviously the normal aspects, that what is the entrepreneur, what is the product he's selling, is his story compelling enough. At this point, it is not viable for us to take any deal below 3 million rand because we only make money on success. So it is not viable for us. In future, if we have plans to take also small deal sizes, but at this point, we want to take at least minimum 3 million rand. And then the most important factor is that what valuation you are giving and how much equity you want to sell. It's not the crowd platform dominated, it's the entrepreneur decision. But our investment committee will only justify whether you have valued your company at 50 million rand. So it is 50 million rand or not.
Do we have any question about that before we move away from the question? Before we move away from the subject of the form? Yeah.
And they have to give an evaluation of what the business is worth. And then based on the evaluation, they'll say how much equity they want to give away. And obviously you won't do any deal less than 3 million, So I'm trying to find out, so is this is not for startup businesses? If you're going to evaluate a business from scratch, how far in, how long or how profitable should the business be already for it to list on the platform?
There is no requirement to be profitable. Because we, as a startup, you do your valuation based on future projections, isn't it? So we just make sure that whatever you projected, it makes sense according what is the addressable market you have set. It is obviously we have minimum requirement which your business has to be registered 2 years ago. So not necessarily your business is making profit, because business don't make profit in first and 2 years. My airline was not making profit. I mean, 2-3 years airlines don't make profits. 5 years onwards you make a break even, and then you capitalize business, and then you go to a profit point. I mean, this is normal. So no, this is not a requirement. Your minimum 3 million raise. So valuation can be 100 million rand, and you want to sell 3% of the company.
Are you answered? Do we have any question for Taps? Yeah. Maybe get a mic.
Professional of you. Okay, so my question is about the performance of the platform so far, and your experience in trying to get those kinds of businesses that have approached you through the door and onto the platform.
Okay. So when we launched, obviously there was a very red flag on us because this space was not regulated. So only 1 year we had to work with FSCA, and we are like their sandbox. We are in their sandbox, so we are actually helping them getting this space regulated. So far we have done one proof of concept. The business wanted to raise 3 million rand. Within 30 days, he managed to raise 4 million rand. Wow. And within 1 day, he managed to raise 1 million rand. Wow. I mean, it's their Drifter Brewery. It was a brewery company, and it was very successfully crowdfunded. Last week, we have launched Lula. It's a shuttle app, Lula, and he wants to raise 2.5 million rand. So far, he only has raised 300,000, but that is a reason behind that, because he was upgrading his technology. So we haven't spent on the marketing because he has given us a hold. And we also, upgrading our technology. I mean, Uprise Africa was also recently invested through a Silicon Valley investor. So we are also at the growing stage. So that's where. And third one we are launching, it's a very big deal. 24 million rand he wants to raise. His valuation, we agreed at 120 million rand. And it's going live on 25th of April. It's a very, very good deal.
Wow.
We'll look out for it. Maybe you'll get some investors from this room.
Wow. Okay, one last question before we move on. I think I saw a hand. Okay.
I just want to know about the closing of the deal. Is the requirement to raise the entire amount? So let's say the Lula guy raises 2 million, and that's one question. And then are the shareholder certificates given to the funders, and how does that process work?
The campaign is live for minimum 60 days, maximum 90 days. So if you don't raise within 90 days, we take you off from our platform. Why we have just given 90 days? Because if you're not funded by 90 days, there is no option. You won't be funded. So we believe that the shorter the period, the best it is for us. And after, if like Drifter was raised in 30 days. So depending on the timeline is really depending on the timing of the raise. And once it is raised, there is a 1 month process, because there is an entire process of filing prospectus with CIPIC and then going through subscription, and then actually the investor get the share certificates. Yeah, but it's a copy share certificate. The originals are with the statutory share registry.
All right, cool. I want to ask you, it's like your Infinity Anchor Fund, it's a Section 12J VC company. For those who don't really understand what the Section 12J is, can you just unpack it a little bit for us?
Okay, thank you. So firstly, 12J, it's literally an income tax provision. And the idea behind it is that the South African government wanted to encourage people into venture capital and that they invest in startups. So for you to be a Section 12J venture capital company, you have to be approved by what was FSB, FISCA, Financial Sector Conduct Authority, and also National Treasury, SARS basically. So once you are approved, you can take money from the public and institutions, and then they get a tax benefit. So for simplicity's sake, if you at 45% tax bracket, you put in 100,000 rands in that financial year, and they typically close at the end of February, you'll get 45,000 rands back. So you get the money back in the year you invested in as cash, or for companies it may be a tax credit or offset on what you may be owing to the revenue services, but you physically get the cash back in that year. So it makes it attractive then for investors that in reality your investment grows at 100,000 rands, but you've gotten some money back. So that's the simple principle behind it. But as you then get into it, there are certain things that have evolved over time where then they make certain limits. So again, the idea is that it must be small, medium enterprises. The cap is that it must, the company must have gross assets of 50 million rands or less. Gross assets means equity, debt, and so whether you've borrowed the money or not, but your assets, if they at 50 million rands or less, you then qualify to receive investment from a 12J. But how the 12J companies are also structured is that you can't have one investor in the fund who puts in more than 20 million rands. Again, what they were trying to avoid are corporates that put money into a VCC company for tax purposes. They wanted it to genuinely be different kinds of investors that are going to be there. But basically, the whole idea was to get money into the VC community by government giving in a bit of tax incentive.
Yeah. And how involved are the investors in the startups that you invest in?
Typically not much, because how the venture capital funds are structured is that you have a fund manager, you have a fund, and then the underlying companies that are invested in. So the investors are typically invested in the fund, and depending on your prospectus and what you promise to them, you know, how you report and all of that, of course, they have a right to know what's happening in the company, but it would typically be the fund manager that makes investment decisions and then report to the investors on a periodic basis.
Okay, and then you always hear a lot of Section 12J VCs saying that they normally offer shared services to these startups to try and mitigate, you know, risks and, you know, failure. And do you think it's a good thing for investors to actually be fully involved in the operation of the company, or should they rather just leave the startups to just focus on what they do best and then they just give them the money?
Look, I mean, I think there's different ways each, you know, VCs choose to operate.
Okay.
I think being involved in the running of the company makes sense, but by involvement, I mean, like in our case, we at least will be in the board of any company we invest in so that we see what's going on. If it invests in or buys equipment, we would also want to see those kinds of decisions so that you have a little bit of see-through on the underlying assets that you basically putting investors' money into. But the shared services model, personally, I don't like, and we don't do it in our fund, because I think there's a perverse incentive there to continue, you know, getting the entrepreneur depending on you. And the whole idea is that for them to succeed, they've got to be able to stand on their own. So, but it's a personal view. I think those that do it and think it succeeds, you know, they can justify for themselves why they do it. But you also want to have a bit of an objective relationship with the company, because, you know, the company may not be performing, but because you're making money out of services, you know, you could easily be encouraged to keep going for much longer, which could, you know, prejudice the investors in the fund. So I think it's a dicey model to be in. But in our case, I mean, we do asset rental companies that do movable assets. So if we invest in an SME that finance those movable assets, we at least want to know that they have the capability to collect the money.
Okay. Do we have any question around that before we move on? Okay. Please get the mic.
I just want to know if somebody comes to you, do you actually mentor them through that process, or is it just about sitting on a board?
So we don't mentor them. We typically evaluate the company and see whether, you know, we're comfortable that the projections make sense. Maybe some history of operating. So if you've not operated for long in asset rentals, maybe you then have an administrator that has a little bit of track record. So that's what is important for us, that you demonstrate you can manage the company on your own. we're not involved in the mentoring. Again, I mean, I take the view that those kinds of things are what get you a little bit more attached in the company than you should. You want the entrepreneur to stand on their own. If they need mentoring, they can get it. But if we do it on our own, there is a little bit of a risk that we could end up prejudicing the investor because we're now pushing somebody a little bit far beyond than they should.
Another question? Do we have another question? No. Okay, so Pierre, you did mention that you've been a startup before and now you're an investor.
Right.
Do you think investors make mistakes? And what are some of the mistakes that investors make, if they do?
Yes, of course, they make mistakes. Everybody makes mistakes.
I mean, because you see the Dragon's Den and Shark Tank, and
Right.
you know they look like they know what they're getting themselves into, and they're just aggressive in these startups. And you're thinking that if they're going to be choosing a specific business to invest in, they've already done their research, the due diligence, and everything. But does it work out better? Like
Well, I mean,
in most cases?
the stats show, right, without being negative or anything, that startups fail mostly and they don't succeed. I don't know what it is, but it's certainly very high percentages of failure. Of course, they make mistakes. Of course, they need to have eggs in different baskets because some of these eggs are not going to turn into a pretty chick. They are going to turn into something really ugly. So, and that's why for us, the investments that we make, we want to understand the business, and we want to stay very close to it because we want to give ourselves the best chances, ourselves and the founders, the best chances of success.
Yeah.
That's why we just don't throw money and then hope that it will turn into something pretty. Because again, there's more chances that it will go bust than it will be a success. So to answer your question, do investors make mistakes? For sure. There's no doubt.
And then generally, do you more look at the potential success of the business, or do you look at the team? Because I mean, you hear a lot of investors saying, "I can't invest in you if it's a one-man business. You need to have at least, other co-founders."
I did that. I'm a failed entrepreneur.
Were you alone in the business?
Yes.
Okay.
I was alone in the business. I had a software company, social gaming. I thought it was great. I loved it. But I tried to raise funds in 2008 at the height of the financial crisis, and I got thrown in my face many times. You're alone. What happens if you die? I was going to say, I'm not going to die. But I said, yeah, but if you die, our money is gone. And it's like, okay, thanks for thinking of your money if I die. But no, but I get it. So the lesson for me was don't start a business by yourself.
Okay.
And the other that may be interesting for you guys is if you're developing a software, you really want to have it in-house. That's another mistake I made. I said, yes, it's my software. Okay, but who developed it? Oh, this guy I'm paying. Okay, what happens if this guy you're paying dies or decides to do something else? Okay, well, I get another developer. Well, software is difficult. Once you started developing software and you get another developer with its own logic, it's difficult. So you want to have in-house as much as possible what you're doing, and you certainly don't want to start by yourself. I think it's completely off the question you asked me.
No, it actually does make sense.
Yes.
Any question for Pierre before I move on? Let's take the gentleman there, and then we'll come to you. Let's start there.
Hi. Question would be, what mistakes do you think startups make when they come to you as funders? You've spoken about your guys' mistakes. Let's ask the flip
Well,
around.
I think there's some basic mistakes that I see which shouldn't be there. In the business plan, if you receive a business plan and you don't see a SWOT, to me right away, I'm like, SWOT is to me is the core of everything. It shows me that you understand your business, that you thought it through, and you're really trying to position yourself and try to hedge your risk as much as possible. So when I receive a business plan, a deck that does not have a SWOT, which to me is the basic, is a big mistake that I see. Other mistakes is obviously the obvious one, the big valuations based on no revenue, but it's already worth God knows how many millions. Well, many, you can have many mistakes, but another one as well I can think of is you know, it's the personality as well of the entrepreneur, and you want someone who's self-assured but not cocky, who thinks that he's got it all figured out and that give me money and I'll make it happen. And last one, before I stop talking and I'll let my is don't say this market is a $150 billion market, and if we can only catch 1% of that 150 billion, we will make so much money. Again, that doesn't work because it's not that simple. So,
Do you want to jump in on that?
You see, startup are bound to make mistakes. I mean, there's no reason that we will not make mistakes as a startup. But the main aspect is that, are you ready to change your strategy? So some of the startups I've seen is, they are very rigid on saying that we have to keep our focus aligned. And there's a long debate on that, whether we should keep our focus aligned and not get distracted, or whether we should embrace the creativity and uncertainty. Because startups will have uncertainty. You can't have, for example, you have projected certain things and they haven't gone your way. So you have to twist and make sure that you adopt to the changes which the business environment needs at this point. So that is one thing that I have also noticed, that it is important that the team gets aligned before they do anything. So if it's like a sport. If you're going for a sport, I mean, obviously first you have to understand each other's personality.
Yeah.
I have seen startups failing just because personality clashes. I mean, business was good. There was good revenue model. Everything was perfect. But just because personality clashes were there. So you have to adopt, first your culture and personality conflict have to go through. You have to make sure that there is a strict alignment between the personalities. You cannot be one. I mean, you can have difference of opinions. People say that a startup should have 3 founders, 4 founders. The 4 founders cannot think alike. My strength can be your weakness, and your weakness can be my strength. So we have to find before we go into these. So these are very behavioral. That's why I believe that it is very important that we understand the behavior, the personalities. When we go for it, we then we don't need to stick too much focus. We can change. We can embrace the uncertainty. We can adopt strategies according to the environment. And one thing I've noticed is our faith factor has to be bigger than fear factor. Definitely, because we fear so much that even if it has to go right, it will go wrong. So our faith has to be very strong. That yes, and when our faith is strong, I think we just get on to it. Somehow we pass that hurdles as a startup. I've seen where people have that faith factor and if they've done wonderful things.
Yeah, wow. Sorry.
Okay, well, I mean, I agree with Tubbs on the fact that I think entrepreneurs must also realize that investors aren't always people who know everything. The fact that they think things must be done in a certain way doesn't always mean that that's the way they must be done. It could just be their approach to funding, and I think everybody has a right to approach funding in a certain way, but I think what's important is always to take the feedback, because every time you get asked questions, you can then get better at what you're doing. But I think, Beth, on the stock exchange side, one of the things I'm seeing is that it's also important as people start up the businesses to see whether these are businesses that are scalable.
Okay.
Because for me, I think the scalability often talks to whether the idea is sustainable.
Yeah.
You could have a business that's based on one client. When that client is not there, then what happens? So I think that for me, if anything, often is a risk to startups, is that you can get 3 million, have a business that turns over 30 million rands. Where is it gonna end? And I think that often when people start, they don't want to think that. They think listing is intimidating and you don't want to be there. And I don't think listing either should be a benchmark of a company. But I mean, we've seen interesting things happening in the tech environment where you've had companies listed before they make profits. because people believe in the sustainability of the model.
Yeah.
And so we take that view as well, but we give you a period of 2 years that you must, within 2 years, be able to reach a market cap of 200 million, but you've got to show us that you have, line of sight of deals that are going to take you up to that kind of valuation, not just hope. But I think for me, the point, even in these startups, because I mean, you could have a startup which you almost like an employee, you're doing advertising for this company. There's still space for that, and you will get funding. But chances are that if you're not looking at scaling up your business, you're either going to lose that client, or somebody much bigger than you is going to take the market over. And I mean, in the fintech environment, you're also starting to have borders that are getting, fuzzier and fuzzier, that you could think you're a South African company, but you effectively going to be competing with global companies that have a footprint. So for me, I think for the South African environment, I think scalability is quite big. I mean, we've seen your Ubers coming and, get displacing some companies in the market, Netflix, and unfortunately, if you don't have a model that's rigorous enough, you're probably not going to be around for long.
Yeah. Do you think, though, is it hard, though, as a VC to figure out if startups are just in it for the money? Because you hear there's a lot of startups who are just really good at pitching and really good at perfecting and polishing their pitch. And then when it comes to them actually doing groundwork, it's another story altogether.
I mean, I think, if you've had pitches many times, you sort of know the smooth talkers and those who have an idea, because I mean, there is delivery and there is the idea. So when all that's taken out, the idea must still stand. So I don't think many investors, except maybe institutional investors who aren't using their money, and maybe there's turnover, you have analysts who are there for 3 years and they change. So they may have certain standard questions they ask, but I think general private equity and venture capital, they see hundreds of business plans, and there's almost sort of an instinct of what works and doesn't work, at least to them, even in the questions that they ask. So I think it's important to perfect your pitch, not just for believability, but the more you do it, the more you get asked questions, is the more you get better at even the model itself. Whether it's going to make sense to investors or not. But as I'm saying, I mean, people who are in the startup environment, who've dealt with entrepreneurs, will see, because it's also, at least in my view, not about how charming you are, it's also the passion and belief in the idea. Because, I mean, there's many ideas, and a lot of them aren't rocket science. I mean, there's very few people that are going to come with something that no one has thought about. Often is there the right team? Is there the right money to scale it up and quick enough? And, are these people who are people who gonna stick it out even when it's difficult? Because that's the other thing. I mean, if you've been an entrepreneur, it is gonna be difficult. So when you look at somebody who's not convincing that when it gets tough, they can survive, it gets difficult to back them. Because ultimately you're backing the individual or the team. That's where it boils down to. So I wouldn't worry about, I think people can rehearse for as long as they want. There's even people who mentor them, But I think most investors have seen sweet talkers, and there's an instinct of this one.
Now let's talk about entrepreneurs who are too attached to their ideas. And a lot of them go around with non-disclosure agreements. Do you sign those? Because a lot of investors would say, no, I'm not interested in an NDA. I'm not going to sign an NDA. Just forget about it.
Look, I mean, I think there's a very fine balance there. I think intellectual property must be protected.
Okay.
I think a lot of entrepreneurs go around giving their intellectual property without realizing, especially with corporates. So I think there is a little bit of a risk there, but I also don't think an NDA is the answer. I think register your idea if it is something really where you've spent a lot of money.
So what's better, to patent it or
so that's the first step. If you can afford it, If you can afford, patent it. If you can't, I think then, work on the idea and pitch when you are ready.
Okay.
Because, the more you share this, I've seen people who are happy, a company from Silicon Valley came to me and they flew, they saw my business, and 3 months later they've not heard from them back. Half the time, maybe the idea is not good enough, but half the time they think, well, we can do it on our own. So, but...
It's a dog-eat world.
Yeah, but having said that, though, the reality is if you want to get money, you got to open up, and it comes with the risks of, people may go and do it, but I think if it is really something special, try and protect the idea if you can. NDAs, I think they're important, but most of them, are not worth the paper they're written on.
Okay.
But for me also, I meet many people who want to share ideas. If you want me to sign something before I've even heard what you're gonna say, it could be something that you are 1001 person who tells me now, I have an obligation to be confidential to you. So share what you can share, and at a point where I'm interested to listen and you're gonna give me your financial information and we can then look at legal agreements. But I'm not gonna sign any NDA on the first meeting. It's just not gonna happen.
Okay. So now, do we have any question around that, around NDAs? All right, cool. Yeah. Get a microphone, please.
Hi, sorry. I actually have a question, just bouncing back to Pierre, because it's now in my mind. So many people have said, don't talk about the market size, don't talk about a small percentage. So if we can't talk about the size of the market, and we can't talk about what percentage of the market was going to make us money, how do we get that information out?
Well, you can talk about the size of the market. You should talk about the size of the market because it shows that there is a market in the first place. But then it's more about showing how you're going to grab some of that market instead of throwing some ridiculous numbers of 1% or 2% will give me this much, which is crystal ball stuff. It's more, how am I going to execute? And actually execution, that goes back to the NDA thing. An idea, as you said, most ideas are not revolutionary. And if they're revolutionary, they're not going to work because they're probably too early to actually work, commercially speaking. So there are ideas that have been floating around. And it's really much more about execution than actually an idea. So being wary of your idea being stolen, I think if you're an entrepreneur, you shouldn't worry about that. You should go full speed ahead. Just try and execute. Just try to get the right partners on board. Get smart money. So you don't get just money. You get contacts. You get the network.
Yeah.
You get the support. And then full whack forward instead of worrying they're going to steal my idea. So.
Yeah. Yeah, just in terms of the deals that you're looking to make, right? Do you look at pre-revenue startups? And secondly, on the smart money side of things, just if you can just share from your perspective, because you said you're looking at fintech startups, from a smart money point of view, what sort of value do you guys bring to the table?
Okay. What was the first question again? I got the second question in my mind.
The deals that, in terms of the deals that you're looking to make, yeah?
Right.
Do you look at pre-revenue startups?
Yeah, we can look at both. And when you're a seed investment, often you're going to look at pre-revenue anyway. The investment, as Stabs mentioned, the revenue are going to come later, at a later stage. So I would say actually mostly pre-rev, As for the value that is brought, well, knowing who to talk to and what to tap into, making the right strategic decisions, all this comes with experience and talking to the right people who have the experience, who have been there and have done that, and know what they're talking about. I've been in, well, you probably know what you're talking about, but I've been in the shoes of the one who didn't know what he was talking about. I had this great idea and I thought it was great. I didn't know the market, didn't think it was that great. And if I had someone around me who would have told me, actually, it's not that good, or you're not going about it the right way, it would have made a big difference and I would have saved myself a lot of money. So.
Okay, do we have a question on the side?
I just wanted to ask, at what point should a business start investing into operating systems to actually function efficiently? When comes that tipping point?
Depends on the entrepreneur. At what point do you think it's right to make that decision? Because again, I mean, to Pierre's point, often it's the execution. If the idea is right enough, probably should own the engine of the business. As you were saying, in the case of software, you want to do some of it internally. Most investors will want to know that you have control over your systems, because ultimately the money is going to rest on that. So really, I mean, I don't think there's a right or wrong answer into it, but I think my instinct would be that if you can invest in the operating system, invest in it, because then it gives you a little bit more control over your business. You know, whether the business is going to succeed or not, I think there's never a guarantee. You know, you could run and 5 years later you've gone down. You could run for 10 years, or it could be 6 months. So you're going to have to make that call. I don't think there's a norm of, at this point, this is what you must take.
Okay. Now let's talk about startups that are very skeptical on giving up certain amount of equity of their businesses. Generally, investors take how much percentage? Or does it depend on industry to industry?
Look, I mean, I don't think there's a norm. I've seen in Silicon Valley, which is, you know, popular and people use it as a standard.
Yeah.
They would do I mean, some of the incubators will take 7%. That seems to be the norm.
Okay.
Investors, some of them will probably put in up to 25% because they still typically give the entrepreneur a little bit more. But there are also some incubators who will not take up equity because, again, they will incubate you and say at the end of 3 months we want to see whether we can invest or not, but they don't take equity up front. My own view is that as a sort of mentor, it's probably not wise to try and convert your time into equity. There's always going to be a bit of a bitter pill with the entrepreneur when they make money. I think if you invest real money, and there must be some valuation, because it gets to have a little bit of fairness. But on the other side of entrepreneurs, I think it's foolish to hold on to 100% of a business when no one is going to give you money. I mean, why should anybody give you 3 million rands debt in a startup and not take equity? You know, there may be the banks for that, but other than banks, I think, you know, if you have an angel funder who's willing to do that, it's okay. But often a debt equity blend or equity is typically what an investor is going to want, because you're putting in money in a risky business because you want upside. So I think you've got to decide whether you want investors in your company or not, but you can't go around pitching and you're not willing to give up anything.
Yeah.
Then go to banks and borrow a loan against your house. And when you're ready to talk to the market, come to the market.
Yeah. Does Uprise take equity?
Yes, Uprise take carry.
Okay.
8% carry on the equity available on the platform itself.
Okay.
So that carry obviously doesn't, it's from the investor's part, not from the entrepreneur side. My take also on this point is the entrepreneurs attaching too much themselves to the equity.
Yeah.
I mean, they have all the right to attach themselves to the equity, but depend on what stage they are. You see, when a startup starts, nobody is going to give you money. If you go to VC, they will ask you to bring traction. How do you bring traction? You can't bring traction if you don't have money. If you only have money, you do marketing, you do sales, you have to have money to bring that traction. So it's every time most of the startups fail because VCs tell you, and I think VCs are sitting with LP money, so they are responsible. They have a mandate and they are answerable, accountable to these LPs. So what option we have as a startup? The option is going to family and friends, enabling our social network and bootstrapping. So all this hype you see in the TV, in the media all the time, that this startup was sold at this startup was sold at that. You are not that startup at this point.
Yeah.
You will be that startup. It's good to have that passion.
Yeah.
But illusions without execution are what? I
Yeah,
mean, it's
that's
just
true.
illusions, right?
Yeah.
If
yeah.
there is no execution, so how do you do execution? You make family and friends fools, right? So the more you're good at making fools, the more there is a chance you get traction.
That's
So
true.
keep making fools. I mean,
Yeah.
not in a bad way. I'm saying
Yeah.
just try and go and look. Your son, your daughters, your friends, your sisters will invest in you if you don't have traction. No VC will invest in you. And if you are a very good talker, you can maybe somehow manage to convince an angel investor or somebody. But if an angel investor will give you money, he will not give you on your business plan.
Yeah.
You have to sell yourself. You have to sell your dream to him. Then only an angel investor will give you money. So that's why I think we are, as a platform, we are a very right fit at this point. Because we give you, first of all, we give you traction. Because you get traction. The investors, you should sell a story in a way where your investors become your consumers. This has to be the main point when you are doing a crowdfunding. If those investors are just giving you money, I don't think so that should be a good reason for you to crowdfund.
Yeah.
You really want that investors to buy in you, in your product, in your vision, in your dream. Even if it's a B2B, they have to buy in you and open the doors for you. So if they have invested, they will definitely open the doors for you. So like beer, I mean, when Drifter Brewery went live, just through the platform, he got a 1.8 million rand contract from a Korean company. Just because of he got the exposure, the articles, 45 articles were written on him.
Wow.
So that kind of exposure, market exposure you need.
So PR can also
PR really contributes to this. I mean, like I said, your story.
Yes.
Where is your story?
Yeah.
Who knows? You are selling gold, but nobody knows about you.
Oh, yeah, yeah.
So, and if you go to VC have strict criteria, and I don't, like I said, that if you go to an angel investor, that's a separate thing. But I think enabling your social network when there is so much of social media presence now is the best thing for bootstrapping for now until you are ready for the VC. Get yourself ready for the VC, then get your VC funds. But capital raising is so, it is a task. It's not easy. An entrepreneur should run the business or run around to these VCs. And these VCs, you see, I see people, I've told people, this is a survey. This is based on the data, honestly speaking. If you are in Palo Alto or in America or even in Dubai or somewhere there, it takes you 2 meetings to close a deal, maximum 3 meetings. In South Africa, there has been a survey done that until you meet 7 times, you don't close a deal. And imagine, there is a gap of 2 months in these 7 meetings. And by the time you reach at the 7th meeting, either the fund manager has gone, either the position where you're pitching the government department has been changed. It's frustrating.
It is frustrating, yeah.
My team was telling me, about tabs. I mean, this is South Africa. Okay, yeah, I know this is South Africa. I've been in South Africa for 12 years. I'm not originally, by the way, from South Africa, as you can see. They say, no, we have to get this business plan. We have to get this, the forecast, this. They created a 40 pages business plan.
Yeah.
I had to pay all these, these corporate advisors. Corporate advisor to do my business plan, forecast. We went to very, very recognized VC. Obviously, they had to say that bring your traction. After all this presentation, excited, this and that, all that meetings. When I went to Silicon Valley, just to see just to understand what is the ecosystem, so-called ecosystem looks like. So I went there in Silicon Valley, just met somebody, had a coffee in Palo Alto. Then he came to my office in Santon, hand shook, no business plan, nothing. He gave me money, honestly.
Wow.
Yeah, because he believed in me.
Do you think maybe there's a little bit of distrust in the South African VC space? Or what is
but
it that
this
we are
mistrust
doing
is
wrong?
very valid. Very valid. I mean,
Okay.
who is VC? There is no VC in South Africa, sorry to say. Who is VC? VC is supposed to take risks. Nobody takes risk here at all. There is no entrepreneur spirit.
I don't know. It's like, do you want
There
to
is
jump
no
in
VC.
that?
Forget about it. There is no VC here.
Also, because I've had a lot of people also saying that, trying to get money it's almost like the dating world where single people want to be in relationships, but they never get to meet. And I'm thinking it could also be the same thing even in the VC space as well. You're a VC, you've got money, and here is a startup that probably needs the money, but where do these people actually get to meet and how?
Yeah, no, I mean, it's true what Tubbs is saying. I mean, we've not for a long time had venture capital culture in South Africa, at least to the extent of the markets. She's comparing to the US and Dubai or even Europe. We generally have been conservative, and I think there's been sort of a structural reason for it. Most of the money, because if you go to the US, a lot of the VC funds get money from endowment funds of universities or even pension funds. In South Africa, the rules have generally not been favoring putting money into alternative investments.
Yeah.
But now you're starting to have legislation that's pushing that to happen, that a percentage of the funds goes into venture capital. The Section 12J is also fairly new, and I think it's only about 2 years that there were changes made that made it attractive for people to put money and some sort of certainty. So she's right in that you've not had a big pool of real venture capital. But it's starting to change a little bit, but it's taking time to even get, I mean, I raise money with some of these institutions, and it takes a lot of time to do it. But what I'll say, I mean, don't stop. Even if it takes you 7 meetings to close a deal, do the 7 meetings. I mean, on Infinity, we started raising money. We were optimistic about what we're gonna raise. We didn't. I have another meeting tomorrow where I'm trying to raise money for another fund. They've already given a nod that they're going to do it. We met at that SA SME fund. They have 1.4 billion rands that they're trying to deploy. So there is a little bit of change in the market, but it has been rough. I mean, I was looking at emails I sent to a guy who was Fori at the South African Venture Capital Association 2011. At the time, they practically didn't do anything on VC. It was private equity that they are members, and I think even now, very few of them are in venture capital, but now even private family offices are moving into it. So the frustrations are real, that we've not had that culture, we've not had money, but it's changing. I mean, I'm in that market, I'm trying to raise money. The conversations are a lot more different. So you do find people who you meet with, they like the idea and they will shake on it and put money.
Yeah.
But often again, it's because a lot of people who are sitting on private money or even other investors like Pierre who've seen these things in the market can see a gap in the market that's a no-brainer. Because a lot of these things have been done in the world and people will put money into it. So I'm saying it is, I mean, those of you who've been raising money, it's true, there's no venture capital culture, but it's changing. And I think don't be discouraged, you're gonna miss a wave of money that's starting to flow into VC.
Do you think, though, that funders struggle to get quality startups to invest in?
Look, I mean, partly because of the culture, what has been understood as quality startups are people who either have been in banks and are trying to call themselves development financiers or venture capitalists. I mean, you go to a lot of these government DFIs, and there are people who actually don't know how to fund startups because they want to do balance sheet funding or they want historical earnings multiple. You know, in a startup, you're not going to get that. So because there hasn't been that culture, generally people have been looking on investing into startups. So I agree that, I mean, there's the part of angel investors where you're getting free money, but the reality is once you're trying to scale up, you're going to need to show some sort of track record. Either you've put in time and IP to the idea, or you've put in money into it. And at that point, you're then going to need people who are willing to give you a 2-3 year runway to develop it further to a point where it can make money. I mean, Zuckerberg got 250 million from a VC when all that they have, it was just basically an address book of college students. but they understood that the power behind the idea is going to be data, and they put in money in it. It didn't make sense at the time. The valuations didn't make money, but it gave them the runway to have the skills, the engineers, to code and develop a proper system that's going to make money. So that's why I agree that because we've not had that culture, we've not seen or we've not had those kinds of risks taken. But we're now starting to have sort of poster companies where people have taken those kinds of risks. I mean, Yoko is one typical example of what has happened. You now have Bank Zero, and of course there's big money behind them. But I think what we're seeing in the market are people who are understanding what VC is, that it's early stage investments, and you then bring in your network to help the companies grow. It's not often been there. So some of the people you will hear as well in many of these talks, they call themselves venture capitalists, but they've
on
never.
On that, as a startup, what due diligence must I do to make sure that this is the right VC for me, and this is just not fluff? You know, there's a lot of people who nowadays, they call themselves VCs, and what kind of due diligence can we also do as startups?
I don't know. I don't know. So
maybe Pierre will answer that.
Yeah, but for me, I mean, I think the 10,000 hours story applies to everything. I think the more you meet people is the more you will know the questions they ask, and you will know whether it's a fit for you. Because if you need institutional money, if you're an asset manager, you know, institutional investors behave differently to an angel investor. So I think don't be too hard on yourself. But I mean, there's typical due diligence stuff you can do, check the websites. I think word of mouth is more powerful than anything.
Okay.
Because then referrals and people knowing, you know, whether what works. But for me, I mean, as I'm saying, having been trying to raise money for long, I think meet as many people as you can, and you'll sift through what makes sense and doesn't.
Okay.
Yeah, actually, I got I got an investment for, I think it was $1.5 million from Nigeria when I was when I had my company. Okay. But I had to pay I think $15,000 first.
Have you met this person before?
So I realized that it was probably not a good deal. So if it's too good to be true, obviously it's not true. I mean, that's just common sense. As desperate as you can be, and God knows I was, even through desperation, I could see that this was just phony, you know. And then it's the obvious, you know, social networks, LinkedIn. I mean, if the guy's legit in the business world, he should really be on LinkedIn. If he's not, well, actually for angels, it's a little bit different. You got people who loves to stay underground, don't want.
Yes.
So it exists as well. I've seen this.
Yeah.
But certainly, if you claim to be a VC, and you've got no exposure on networks, there's an issue. And then, if they're not asking you to put money up front, then I guess what have you got to lose? At the end of the day, you got to be careful what you sign, of course. But often people are not going to spend, if they've spent hours with you, there's a reason for it, right? They're not going to spend hours with you just to waste your time. So I wouldn't be too concerned about someone not being legit unless it's obvious scammy, pay me this much and I will send you this much money.
Yeah. Okay, do we have any question? Okay. All right, whoever that has a mic can just roll.
Hi. So sorry, I got two questions. So one is related to the culture of the VCs in South Africa. I mean, I think there was an article during this week on MoneyWeb comparing South Africa around the 3 criteria that Israel has around their program of YOSMA. So the existing VCs, my question is the existing VCs like yourselves and other people that you guys know, how can you guys foster, without a kind of a regulated culture, to assist other VCs to also establish? You know, as much as you got the startups requiring funding, how can the VCs help each other to kind of get this culture of funding going in South Africa to aid all the innovation that's coming out? And then the second question is, as much as guys are prepared to give up equity in their companies, what would you recommend in terms of let's just say the guideline that you use of 7%, but then a crazy valuation, or in terms of the amount that they're requiring. What sort of guidance would you give to the guys here today?
Yeah, I mean, I think, again, Israel's startup environment has been developed over time, so a little bit different here. But for me, I'm a real believer in the fact that there is change in the market, partly because of legislation that's pushing for enterprise development, and some of the incentives that are being given in companies, the changes in BE, the 30% subcontracting by government, it's sort of forcing money into that environment. So there are things that are happening that are making money get into it, because really in South Africa physically there was no money for venture capital. But I think if I look at the capital markets as well, in the past 20 years, 94 to about 99, 2000, most of the companies that are now big in the JSE were small. I mean, your MTNs, Vodacoms, and people who put money into them, they got unbelievable returns, and they really had no incentive to go outside of an index. But that started faltering, where some of those big companies are no longer performing as much. But other than that, analysts are questioning even their viability into the future, whether they are competitive. And what that is doing is that it's making clients whose money is being invested say, what's the next big thing? Where should the money go? So many investment consultants are effectively...
Please. What's happening? Okay. Sorry about that. The thing is, we're recording this, so we need the sound for the... Maybe let's try and fix this one in the meantime.
Yeah, so I think we'll probably mature as a market compared to other developed markets, because really, I think, again, the concept of smart money, we're seeing it, I think, a lot more concentrated and more marketing in Cape Town. I mean, the guys in Stellenbosch are really doing big things in fintech, particularly, that are catching people's attention. So I think a lot of institutions are now feeling they are missing out on the next wave of new investments that are going to build returns for them. So there is that shift, but as I keep saying, we're not yet at a point of an Israel, a Dubai, a US, but it is changing. I think those who are trying to raise money and big money just keep knocking at the doors, you'll have more success. I mean, they practically, as I'm saying, the SME initiative was a CEO's initiative. They put 1.4 billion. They're looking for venture capital firms to put money into, and they're clear that they're not looking for asset managers. So it's not where it should be, but I think it's starting to change.
Okay.
Agree that there is a lot of money in the market. There is no shortage of money in the market, right? But where the money is, like he said, that there are big fund managers, CEO initiative, SMME fund. But end of the day, they also are fund of fund who gives money to the fund managers. And the fund managers, remember, even, I mean, on average, a fund in South Africa, a VC fund is 100 million, 200 million rand. And then these fund managers are hired, and this I don't know how much you know, they take 1-2% of the management fee. So it is in their more interest to keep the money in the bank, have interest, earn interest on the bank, and make your fund more grow, rather than deploy the money, because once the money is deployed, most of the startups will fail, definitely 50% startups will fail. And then there is no exit in South Africa. There is no good exit in South Africa. So most of the times the fund managers, you have to understand that why they want to hold on to the money. That's my research. I'm telling you from very deep research in this industry. They don't want to deploy money. They want to keep money in the private wealth account of Nedbank, FNB. They want to make good percentage on that. And then they have high salaries, good luxury life, they drive nice cars, they have beautiful offices, and all on cost of, and LPs LPs, once they give money, obviously they have their interest that money has to grow. And grow, there can be different reasons. Most of, like CEO initiative, the CEO initiative is actually to deploy the fund in the entrepreneurs. 2 years money was sitting in the, trust me, 2 years the money was sitting in the banks. The fund manager never deployed that fund for 2 years. Then there was a time came when that fund manager had to resign for whatever reason because he was not deploying the money, because he came from a very private equity mentality. Now new CEO has come, yeah, he is a bit aggressive, very nice guy. I would definitely, you know, where there is credit to be given, I'll give the credit. Yeah. Yeah, so I'll give the credit to the new CEO.
No, look, I mean, most of the stuff is correct, but I guess...
We're back there, yeah.
But I guess the difference, I mean, for me, and I say this tabs because I live this on a daily basis. So there's a difference between asset managers and venture capital firms. Okay. So the asset managers, the model incentivizes exactly that, because they must keep the funds and then they decide on whatever the hurdle rate agreed to on what the return is going to be. But most institutions now that are giving money to VCs for the very same reason that they don't want funds to just earn a fee, often before you get money, the big question is, where's the pipeline? So no real funds now, funds of funds, are going to give you money unless you have a pipeline on where the money is going to be, because then the 2% tends to be 4%, because the fund is already charging 2%, they give it to another fund, which is for 2 years and doesn't deploy, then you're just simply losing value. So those that have real VC mandates, it's becoming a little bit of a problem, that part of now why money is not getting in is that they are insisting that they want to see the pipeline that's coming into them. So, I mean, with Getz or at SAME, they claim to have deployed 500 million of that 1.4. I don't know the funds they've given yet, but there is a little bit of a movement. So what she's saying is correct. That's how the market has been. There's been a problem of deployment, but now it is changing, as I'm saying, purely out of economics, not because people have suddenly become good human beings. It's just economics of it, that no one wants to lose money out of fees, and the money is not being deployed. So they will say to you, if we give you money, we want you to show it's going to SMEs, this is what's being done.
Do they give them like a grace period?
I mean, some of them, as I'm saying, will not give you the money until you show a pipeline.
Okay, yeah.
And then you have a deployment plan. And some of those who had given money to funds that have not deployed it, they've taken it back. So yes, it is a problem and it is real. I'm not, but what I'm just saying is that let's not give up, because then if you think that that's how the market is, you're gonna miss the opportunity that's real. I think those of you who have a pipeline and have a sort of credibility on partners that can manage funds, there is money in the market. I mean, I met in Sentin this morning a company that does asset rentals, and they were saying they're meeting ABSA because ABSA has money that they're looking at putting into it. So there is real pressure, whether it's supply development funds on something to be done. But all that you're saying out of experience, I think all of us have been entrepreneurs. I mean, as I'm saying, I've been trying to raise venture capital funds for more than 10 years. And it's only really in the last 2-3 years that things are changing in the market. So you're gonna get scars, it's gonna be a problem, but I keep saying there is an opportunity not to be missed.
All right, let's take 2 more questions and then we wrap up. Yeah. Is the question specific for TAPS? No. Okay.
When a VC invests in you, he knows you will fail. So don't worry about that. Yeah, he has already done his calculation. that if I'm investing in 10 businesses, 5 and 6 are bound to fail. So if he has invested in you, I'm sure they have done their, they have done their.
Wow.
So it's fine. I mean, you cannot always have 90% of success rate. That's where the culture is all about. Even in Silicon Valley or even in South Africa, like he said, that there is an aggressiveness now in the market. They do believe that if they are investing in 10 or 20, there will be good successes and bad businesses, but it will, end of the day, it will hedge, because those good businesses will be making good returns, and it will hedge the loss of the ones who have lost the money.
Yeah.
So I would say.
Yeah, and well, I mean, you can't have punishment, right? Because that's a little bit what you were aiming at, maybe. I mean, I've never heard of punishment for it.
Okay.
But what I would say actually is failure is like where I come from in Europe. Failure is frowned upon. If you're a failed entrepreneur, it's not good for you. Whereas on the across the Atlantic in the US, it's actually it's valued somehow, and it makes sense because actually you learned your lessons with somebody else's money, so it's great. You know, you now you're going to use my money and hopefully make a success. So from no, but it's true. I mean, you do get in Europe, if you failed, you failed. Okay, next. So, I mean, if you lose 1 million rand, hopefully it's not my 1 million rand to start with. And whether it is or not, well, I mean, as long as everybody knows the rules of the game, then it's a fair game. And then for you personally, then you move on to the next stage and try again and try again and try again. Everybody knows that serial entrepreneurs have lost a lot of money. They made a lot of money. They lost a lot of money, right? And then they made a lot of money again. So, you know, it's a roller coaster. So
there's no blacklisting happening there?
Not that I know of, no. I mean, you've got a contract,
You're
people
safe.
give you money. Yes. I mean, have you heard of blacklisting?
Yeah.
No, no, except if you borrow money from banks, they will blacklist you. But I think it's often recourse against the business. They know what they're getting themselves into. But I mean, back to the point about the culture and where the culture starts. We always push it back to it's somebody else. I mean, how many people in the room, when they've borrowed somebody money and the person has not given it back, like that one is bad. And so I think even us, part of really getting the culture of venture capital is as many entrepreneurs, they're going to have problems when they reach out to you for help them. Whether it's 500 rands, 1,000 rands, and that's where it starts. When somebody has lost their house and they need a back room, and it's your sister, give them the back room to live until they can they're back on their feet and push their business. So that's what's going to change the culture, because the mentality of, I mean, I'm seeing it now in South Africa where there's a lot of focus on businesses that have failed and who was a problem, and I'm not discounting problems that may have been, but we seem to have this mentality that with investments, they mustn't fail. And if we have that psyche as society, then the money is not going to take risks, because we judge harshly those that take risks and fail. So I think we can start changing the mentality by how we behave as individuals. Because, I mean, that's what it is. Entrepreneurs, I mean, the Americans, we all love them because they, when nobody wants failure, they're not going to give you money because they want you to fail. They hope you're going to succeed. But there's enough stories there, even in their own national psyche of, this person failed and made it. They filed for bankruptcy and they made it. But here we sort of have also a similar Europe mentality of if you failed, I don't want to touch that person. So I think all of us in this room, we've got to challenge ourselves on, do we support those that have failed or we write them off?
I have another point just to add. Of course, you can have collaterals, right? I mean, you have to be careful with what you sign, because you may have some investors that are more aggressive than others, some of them that are just right-out sharks. And so read the agreements that you sign, because they could actually include collaterals in this agreement that if you lose the money, they could actually claim this money back on whatever assets you may have. So I mean, it's common sense. You have to read through what you're signing, and if you have collaterals, well, think long and hard if you want to put your house on the, you know, on the line.
I would endorse, like my colleague said, that has to be a culture change and mentality change. And I have seen this because in my textiles time, all the textile fabrics I was giving in South Africa, and made a lot of money, by the way, on that, every consignment I was giving was on credit. So Tom, Dick, and Harry, even if it was a tuck shop, small wholesale shop, I used to trust on them. I used to take risk on them, giving 3 million rand of goods, and they were always a very good payer back, so I did make my money. Same time when I needed 2 million rand, they were asking me now 100 questions. So same persons, not even the other person. So that, I mean, it was quite shocking that people who you have trusted with millions of rand, now they are asking credit guarantees and this collaterals and all that. So definitely there is a requirement that we have to be more risk averse, because if the community is more risk averse, more entrepreneurship spirit is there, I think it's worth taking chance on another entrepreneur because then that, like I said, I made a lot of money. Definitely I lost a lot of money, but I went into a business to lose money. I mean, nobody makes money in airline anyway. So besides that, no, and one more recent example is a very good example which completely fits into the South African market, and it's a very positive one. There is a company called Prosper. I don't know if she's from Australia. She came into South Africa and she wanted to give loans, and she started giving loans to stockwells. Now she's giving loans to these stockwells. There is no collateral, nothing, no credit guarantees, and she's making a very good profit. 30-40%. So they are so disciplined. So we have very good stories also where even they are unbanked. These group of ladies, they take loan from her and give every month, they give her back, and she was so happy. So there is, like, there is something which we can be proud of, that, Stockwell is all South African culture. It's a very big industry to be.
It is. Yeah.
And very disciplined. I mean, they don't bank, they don't have collaterals, they don't sign guarantees.
It's all based on trust.
In fact, she wanted to introduce some app, but they said no. The ladies said no. We don't want this app. We are good at that pay slips, and give us that, slips, and we are happy with that.
Yeah. And now my final question is, can investors coexist, especially when a business wants to scale?
I'm not sure the question. I think, that's the only way. Unless you lucky and find somebody who has a big check. But in most occasions, big-sized businesses are going to have multiple investors.
Okay. And there's never a clash, or?
There could be. You also have got to, especially if you're not listed, then you may want to vet the interest of the different investors. As you were saying, you could find investors that are aggressive, who are going to put money and want to rank first over the other investors, and it creates a bit of animosity. But naturally, most businesses, as they grow, you're going to have multiple sources of funding.
So as a startup, I'm sorry, I just don't know a lot about this whole thing. As a startup, if I have, let's say, Infinity has invested in my business, now another investor is interested in my business, do I then come back and consult with you and let you know that there's somebody else who's interested in me or in my business? And
you have a duty to disclose to your investors.
The transparency, yeah.
You've got to.
Okay.
Because, they also want to know, because what is also risky is that you can't come to me, offer me 30% in the business on the basis that this is how you're going to perform, and then you go behind me to raise another 30%, making the same promises. By that time, then I should be worried as the original investor that the business is not performing. So part of then the transparency is that you're not prejudicing the other shareholders. But it could also be that maybe they want to take another position in your business and invest more. So if there's an opportunity, at least you've got to be transparent to your shareholders about what happens. But also to avoid further conflicts in the business, it's always just good practice, other than the legalities, to be transparent about what you're doing.
Yeah. All right. Do you want to add on that?
Yeah, I mean communication. Anyway, when you invest in a company, it's almost like getting married, right? I mean, it's got to be, you get close, you work with each other, you have to communicate. If you invest in a company and then the founder goes and tries and raise funds behind your back, there's something wrong there. It just should not happen. So full disclosure, because everybody should be aiming to go in the same direction, right?
Yeah.
Rowing in the same direction. If this happens, then and then you have, of course, issues of dilution of shares, and I mean, like technicalities on the shares as well that you have to consider when you bring in new investors. You know, the valuation. Then there's a whole list of technicalities of you know, to look at as well. But coexist for sure, but always in full disclosure.
Yeah, awesome. All right. Thanks a lot for being a part of our panel. I'm now going to get the 3 guys that said they were interested in pitching tonight. But before we do that, I just want to know, what are the top 3 checklists that stands out for you that you're going to be looking out for when these 3 guys are going to be telling us about their businesses? It's literally going to be strictly 60 seconds. So suppose you're in an elevator, it's going to be an elevator pitch. Suppose you're in an elevator with somebody you want, I'll come to you, with somebody you want either funding or literally whatever you want to be pitching for. So literally after 60 seconds, you're going to stop. There's not going to be any other chance for you to go on. So I'm sure you've perfected your pitch well enough to actually be strictly 60 seconds. So I just want to know first from you, what are the top 3 checklists that stands out for you when you're listening to a pitch?
For me, if it's a good story, story has to be very compelling, because that's what my requirement is. Secondly, it's a minimum raise of 3 million rand. And thirdly, how good the entrepreneur is making me in full.
Okay.
For me, I'll start by saying good luck, because 60 seconds is like this. Wow, to actually convey in 60 seconds, that's going to be really hard. So I think it would be more in the, I would say, in the person and what this person actually manages to convey in just 60 seconds. Because I don't think we'll be hearing much in 60 seconds. So
we don't have much time.
No. I'm not criticizing. I'm just saying it's going to be a tough one.
Yeah.
Yeah, I mean, for me, it's the same. I think it's the 60 seconds will determine whether I want to listen to you again.
Oh, that sounded a little bit ruthless. Did you have a question? Okay. That's fine.
The question is based on the prototypes that would be presented to you. Would you be interested in hearing, because the major prototypes are bound to fail, like you normally say. So in the nature of VC, would you be in a position to invest in prototypes, looking at where we are currently? South Africa is a developing country, so there's a lot of things that would be tested and tried first before a person like yourself would be interested in. So I want to know, from your different spaces and your experience, would that be a viable thing to be interested in at this particular time?
We have plans to take prototypes, because that's where crowdfunding is also a very interesting model, but not at this point, because it is very hard to first educate people and then bring that cultural factor in taking more risks. So at this point, no, but we definitely have very ambitious plan for that. And we also have started a side accelerator program specifically to make you ready for crowdfunded. So at that side, on that mandate, yes, we are looking at prototypes.
Awesome. Do you want answers from all 3? All right.
Well, it really depends on what kind of prototype we're looking at. So we need to know more to answer these questions, really. I mean, we're willing to look at anything, really. And very quickly we see if it's worth spending more time or not, and be honest about it. And I guess having the honesty to say why this will not be, it's not something we want to consider. But happy to look at pretty much anything. As long as it's legal, of course.
Well, none of the entities I'm involved in do fund any prototypes, but depending on what it is, maybe I could find somebody who has interest in it.
All right, cool. Now let's get to the pitching. We're gonna start with Francois. You ready? Okay. Literally, I'm actually timing you. I meant it when I said 6 Okay, so you can start by introducing yourself, who you are, and your business, and then get onto it. Are
That's
you ready?
part of the 60 seconds.
That's part of the
Okay,
60
okay, cool.
seconds, yeah.
Okay, cool. Okay, wait, can I start over? That was way too much pressure.
Okay, cool. Let me
I
just.
completely forgot my startup.
All right, cool.
Okay, so Alcom aims to help small businesses determine their pricing through taking the product value from the business side and connecting it with the customer side. There is a web app that will help small businesses confidently determine their cost price and selling price around a flexible business model approach by first evaluating the resources, the costs, and the sales required to meet their profit or revenue target. And secondly,
It's not me.
It's not me. And secondly, by sorry, I lost my thought there. Evaluating the market value through competitive prices. So the platform will enable you to make changes to your gross margin, your volume of sales, overheads, and will allow you to easily evaluate the changes of any changes on your business. So the platform ultimately allows you to make accurate decisions through expertise that would otherwise be costly and time-consuming.
Awesome.
Yeah.
Cool. Perfect. Do you want to ask him questions, or that's fine? Okay. Cool. No, maybe afterwards. I don't think we have enough time for that. Let's have Liesel. Please give Liesel a hand.
Okay, so in 2019, I'd like to know why we're still making phone calls to make salon bookings. And when we make that phone call, salons are having to write down your appointment in a paper diary or use Google Calendar. So Lila for Salons is a mobile customer experience solution that allows salon businesses to manage their business from their hip pocket. And for you and I, as their customers, we're able to enjoy an experience where we can send our styles to the stylist before we arrive, so saving time and increasing that customer engagement. We're also really passionate about getting great technology in the hands of small businesses and often home-based businesses in South Africa. We have a team of 5 women working across our business domains and a great support crew of women as well in the technology space. I come from 20 years with technology experience in startups and in large corporates, so lots of ups and downs on both sides, which has given us the ability to look at a market that has tens of thousands of businesses waiting for a solution and waiting for a solution that includes the customer in the experience. So we believe that with a low-cost, high-volume product, we can provide returns for investment within 2 years of operations.
All right, cool.
Thank
you. Okay, and we've got CJ. CJ here. Are you ready?
I am indeed.
All right, cool.
Cool. Hi, everybody. I'm CJ, and I am from a company called What 3 Words. And so, what is What 3 Words? What 3 Words is the digital addressing standard of the future. What we have done is we have created a grid of 3 by 3 square meters and covered the entire surface of the earth. And what this means is that literally anybody, anywhere, can talk about any place in just 3 words. And so what this means is if you wanted to visit me at my office, I would give you the words punk, braved, warriors, and that would help you arrive right at my front door. So from inner city Joburg to the middle of the Amazonian rainforest, and even to the middle of the ocean, you can find any place in just 3 words.
Okay, cool. Do you guys have any comments to any of the startups that pitched tonight? And is there anything that you would like to add on, or maybe as a tip?
For me, I mean, really interesting concepts. So great to everyone. The time is really short to get
to
into
unpack
it, but it
everything,
would be, the typical things would be, how are you going to make money? Is it viable in, you know, the technology? Are you writing on somebody else? You know, you know how? Because I mean, like the last one sounds like it's a Google-based solution. There's ways that's free. You know, so those kinds of things of who your competitors are. Where's the money? But other than that, I think they did really well. So for me, congratulations.
All right.
I have, I think everybody won. I've got 3 medals. I would say 3 words is good for creativity. It's quite original. I forgot the name of your, yes. So from a commercial point of view, there seems to be a gap in the market, and that's the case. And then Francois, I think, from technologically speaking, it sounds interesting. I wonder if you're using any kind of machine learning or AI to try and constantly keep it accurate and more accurate as time goes on. Yeah, I think you all did really good, and but much more, you know, you need to see the model. Is it recurring? Is it going to make money? When is it going to make money, etc. So.
All 3 of you get title from me, Chief Passion Officers at your businesses today. So no, there is a lot of passion which is seen, and 60 seconds is not really justified to give their long story, their struggles, their hardships. At least they needed 3 minutes, but it's fine. I mean, there is obviously...
Next time I'll give you guys 3 minutes.
Yeah. But I think that, you know, like for me as a woman and going to a salon, it really connected me. And it sometimes, you know, technology really goes out of my head.
Yeah.
So I wouldn't say, but, you know, this is the connection which I made. Okay, now I'm going to salon. Before going salon, I'm already giving the tips, you know, my stylist. So definitely it's a very good connection, woman to woman.
Wow.
And then, yeah, the passion with that lady and the innovative. I'm so craving to go onto your website. That's all I can say. So I will definitely go onto your website to know more about it. Okay.
Yeah.
Okay.
Awesome. Wow, guys, thank you so much. And I know today we ran over in, I think, 15 minutes. But otherwise, thank you so much for joining us tonight. Our next event is going to be on the 28th. Startup Grind globally. We host women all over the world. Anyway, in May we host female founders, but we're not saying that men shouldn't attend our events. You can still attend, but that's the standard. But we also tryna make people aware that there is actually powerful women that we can have on our platform. And like I always say, if there's anyone that you would like to recommend or that you'd like to see on stage as a guest speaker, do let me know. Send me an email, and then I can just get in touch with that particular speaker, and then you guys can have that person as a guest speaker. But otherwise, thanks again. Don't forget to keep tweeting. Hashtag StartUpGrindJHB, and I'll let you know more about our future events as well. We're still around for about 45 minutes. You can still mingle if our guests will still be here. Get to know each other, get to enforce those conversations that you had earlier on, and see how you can work and collaborate with each other. But otherwise, thank you so much. Really appreciate it. It was really amazing, and I wish you guys all the best with everything that you're going to be involved in. So yeah, thanks, guys.
I have to add something as well. I think Beth did a great job as well. Thank you.
Thank you. Thanks. All right, cool then.